happy, sad, happy, sad, happy. But now I'm exhausted. That's exactly how trading goes. It's always an emotional roller coaster. At some point, you're gonna be giving money, you're gonna be earning money. The whole process is exhausting. Hey guys, welcome back to the After Hours. I'm the eight-tailed beast, and today we'll talk about liquidation in the market. Now, what you have to understand is liquidation is different from liquidity. I'll explain liquidation. When we think about liquidation, we think about taking a company to the point where it's bankrupt. When you liquidate a bank, it's like what happened when those banks failed. They had to be bought out. They had to transfer the title. All the properties were repossessed by the government or transferred to someone else. Now, if we think about it in terms of stocks, let's actually go to Bitcoin. When you look at Bitcoin, you probably saw stuff in 2021, in 2022, and a little bit in 2020. There was a lot of cryptocurrency scams. Now, when we think of Luna coin, you probably saw these currencies trading at about $100. Then one day it was trading at sub pennies. When we think about why did it go from whole dollars to pennies, and who bought a lot of that currency, and now they're pretty much broke. Now they do have the coin still, but they're worth a lot less. That's liquidation. In penny stocks, do they do that? Or is it just in currency? Well, the closest thing would be dilution. And when that happens, people think about those extreme scenarios where it goes from $100 to 0.0001 of a penny. Now, when you think of that, all risk management goes out the window. People don't want to be in that situation. And you know, most people buy. Now that goes double for this market now. And the reason that is because we're at all-time highs in SPY. That pretty much brings interest into the market. New traders, new people. Now that money that's coming in, that's liquidity. At the end of the day, when we look at liquidation, how can you profit from it? Is it in danger? Why is it important? Well, liquidation can happen to anyone at any time. And that's that risk you have to manage when you go into the market. When you trade, you need to have the minimum amount of liquidity for you to get in and out of the stock. Liquidity is the ability or the quality at which you can go in and out of the exchange.
Interested in trading like Stephen Ducks? It all starts with choosing the right broker. Ducks Trading has partnered with Centerpoint Securities to supercharge your trading journey. By joining Centerpoint Securities through Ducks Trading, you can unlock CP Edge, a suite of top-tier trading tools valued at over $6,000 right at your fingertips. Gain an edge in your trading with real-time scanners, cutting-edge news, and a personalized trading journal. Experience trading like never before, with superior short inventory, dedicated support, buttery smooth trade execution, and the opportunity to earn interest on any of your idle funds. Plus, enjoy competitive pricing that suits your trading style. Ready to elevate your trading? Simply click the link in the description below to get started. Now, let's dive back into the content.
And so this week we had a bounce short and we had a multi-day runner. One was MINM. Now MINM, this one had a resistance that had a large range all the way up to $10. Now, when we look at that range, on 3 separate days this week, it did a step pattern going up. That means there was some type of range that had a pullback. Now, when we look at low floats that are around 1 million, we know they can drop a little harder than normal, especially if they get some decent volume. If you look at my notes from the first time that this ran, you'll see that we marked this as a bounce short. And when we look at how much the market cap was evaluated, it said 10 million, but the valuation of the company itself was 60 million. Which means that it's underrated. So that's a bullish feature. There will be people trying to buy this stock, trying to fight that resistance, especially since it's a $1 million stock. And because the range for the 75 million resistance, if you see in the chart, is spread over $6. A lot of people like to test those waters. And because of all of this mixed signals when it comes to, is it bullish or is it bearish? You see a lot of people actually hoped that the early shorts will be squeezed, and it proved that that was the case, that this was likely to be a large squeeze. Now the crazy thing is, there was no news. It was pure hype. We're talking about this stock only went up because people thought it could go up, and it became a self-fulfilling prophecy. There was another stock called RBSN. Now, RBSN, this technology is for railroads. It's from technology, and we know technology as well as healthcare, they are very easy to run. So there was a lot of bullish features about this. There was a low market cap, there was a low float, as well as the technology sector. And we also know that we are at the highest point in history for the SPY. Now this one actually had some type of news. There was a deal. With this new deal being licensed, there was gonna be a little bit of movement. So with this multi-day run, all you need to know is that we needed a large enough pullback to kill the momentum in the run. Now, if you have high liquidity, when it comes to a penny stock, you could probably put in a lot of money and your order will get filled fast. That's going in and out. But if there's no liquidity, if you have a large order, you're gonna have a partial fill. Now, partial fill means that only a little bit of your order gets executed at a time, and it creates a delay. And if you do a market order, it gets even worse because the spread between what the seller is offering and what the bid is asking for, which is the buyer, it can lead to a large loss of money just from the spread between the two bids. So if there's a lot of liquidity and the stock is ranging, let's say it's going up because we're in a bull market and it's around $10 and there's a 1 cent spread, you'll actually get this stock at $10.01. But if the spread was $2, that means when you initiate it at $10, you can't be mad if you actually get an execution at 12. That is very frustrating, but it's something you could avoid if you had a limit order, or if you just only chose stocks that had liquidity that reduced that spread. And that's pretty much the difference between liquidation and liquidity. But all right, guys, that's all I got for you today. If you like what you saw, hit the like and subscribe button, and I'll see you in the next video. Peace.